Hi, everybody, and welcome to the weekly market wrap for January 5th, 2018. Happy New Year. Um, I wanted to make this video about where the market is going versus where it has been and the relative perception of what's high and what's not. So, looking at the S&P 500 weekly chart, which you have in front here, what you will see is that we've gone higher tremendously. And it looks like, just looking at this chart, that we're near the highs. We're at the highs. Now, the thing is, if you didn't look closely, this is a chart from October 2009 through July 2012. So you could easily look at this chart and say to yourself, you know what? Maybe it's time to take some money off the table. Maybe it's time to go short. Maybe it's time to take my profit. But as I start to move forward in time from 2012, we'll see that, yeah, you might have been right for the next month or so. And all of a sudden, the bull market continues and continues and continues. And what you'll see here is as we continue to go higher, even after some corrections in 2015 and early 16, what used to be perceived as high at 145 on this ETF is not even on the chart anymore. Now the lowest number on the chart is 180. So the point being, you don't know how high is by looking in the rearview mirror. So this, once again, this is the actual close here, looks high. And it may be high for the next month, or it may not be. I don't know. But the point is that it's not about where we've been, it's about where we're going. And just a couple of interesting points. The earnings ratio, the price to earnings ratio that we're looking at now, it's not low. It's about 19 or 20, depending on how much you think the S&P 500 companies are going to earn. But if their earnings go up a little bit, let's just say $150 total on all the S&P 500 companies for the year per share, and you have a 23 PE ratio, which is high. You take 23 and you multiply it by 150, and that gives you 3,450 on the S&P 500. So right now the S&P is about 2,700 and change. So we're talking about a possible 27% increase from here. Now, I'm not saying that's going to happen because I don't know. I'm just looking at the possibilities, and it almost seems like the contrarian view at this point is that we could go higher. Everybody wants to be a contrarian, but the problem is that when everybody's a contrarian, they can't be a contrarian. And I know that sounds a little crazy, but that's kind of how the market works. The whole way up, everybody's trying to be smarter than the next person, saying, no, I'm not going to get stuck in this thing. I'm going to sell my stock. I'm going to sell everything. I'm not going to get caught up in buying too high and then being the fool holding the bag. But the reality is that sometimes the market has power to move higher and higher, way higher than people expect. So I don't know what's going to happen. I'm not saying that I do. I just know that when you look at these markets over time, they could stretch a lot higher and a lot lower than people expect in times of euphoria and times of fear. So just keep that in mind. Um, just because you made a lot of money doesn't mean you want to cut yourself off from making more. I've had those experiences in the past, and they're just as frustrating as losing money when you're out of the market wishing you were in and watching everybody else celebrate. So what we're going to do is just keep on following what the insiders are doing because last year was one of our best years with the newsletter. So hopefully, as time goes on, we'll just continue to do great. And I'm pretty excited for 2018. The other thing that I just wanted to highlight for this video was this is the best start of a year um, since 2006. So, I mean, if you look at, let's kind of go closer here, zoom in a little bit. Each one of these candles are a daily candle. So this is the close last year, 267. We are now at 273, and we were off on Monday, and we've had 4 trading days, and we essentially made 2.5% in 4 trading days. I mean, just to kind of put that in perspective, if that keeps up, um, we'd be up somewhere around 200% for the year. So obviously, I don't expect that to keep up. But my point is that we've had a heck of a start this year, and it's very possible that the market is entering a phase of catch me if you can. Basically, just let's roll higher and see how many people we can get out of cash and force them into buying stock. So we'll take it as it goes. We'll still use our targets. We'll take them off when the stocks hit our targets, and we'll take our risk tolerances and keep them somewhat tight so that we're not going to get too caught up to the point where when we do see a reversal, and it's coming eventually, whether it's 3 years or 3 months, who knows? But when we do see a reversal, we'll try and get stopped out quick enough so that it doesn't do too much damage. So have a great weekend. Stay warm. It's going to be freezing in, well, at least the Northeast and probably most of the country. So stay warm and we'll talk again next week. Thanks so much.